Welcome to this edition of Peak Performers Podcast with your host, Thor Conklin. Thor will be sharing the necessary tools, strategies, and psychology you'll need to become a peak performer in any area of your life or business.
Great. Welcome back to another episode of the Peak Performers Podcast. I'm your host, Thor Conklin, and we have a special guest coming in today, Adam Stettner. Did I get that right? You did. Excellent. It's the founder and CEO of the leading short-term business finance company, Reliant Funding. He has over 20 years of leadership, management, sales, business development, and operational experience. Twice an Inc. 5000 winner and 5 times on the Inc. 5000 list. Started in 2008, and as soon as I saw that 2008, it brought me back to that time where I was actually closing on a business that I had purchased in August of 2008. Had no idea that the entire financial system in the United States was going to collapse and around the world in just a few short months. Man, bring us back to that time. Hopefully it was a little bit earlier in 2008 when you kicked things off.
It was a lot of fun, 2008. So the reason I entered this space in 2008 is more because the business before it was crippled by the financial implosion. So this was not, had no momentum. In fact, it started from the ashes of everything that burned in 07, 08. I was in the student loan business, and that was a great business until it wasn't. And so banks provided lines of credit to the student loan business, and then suddenly banks found themselves in trouble. The student loan business was strong and it performed very well. And at that time, we had done over 15 billion in originations, assets on balance sheet that all performed great. And the banks made millions in fees off the business. And all of a sudden they went dark and the lines got pulled. And my thinking at that time was, if with this track record and experience with banks, if we can't get money for our core business, how is small business going to get money? And that's really why I started the business, for 2 reasons. First, the realization that small business was going to have a need. And second, I was put in this unfortunate circumstance of 1 minute I had a phenomenal, viable business, and the next minute I didn't. I relied on the banks and they were gone.
You know, interesting. Now, the student loans were backed by a guarantee from the government, are they not?
They were. That's correct. Yeah. So, well, the federal.
Yeah.
Yes. Yeah. In terms of default, the federal loans were. So there was a guarantee up to X%. Okay. So if you just arbitrarily, you still carried risk, but the risk was in basis points. It wasn't in whole percentage points.
Wow.
And so it was really a great low risk business, but nonetheless, banks stopped calling back. And with that kind of mitigated risk and phenomenal returns for banks, if I wasn't able to obtain or maintain my facilities in that environment, I knew that American small business was going to struggle.
Yeah, you know, it was interesting. In 2007, I had a client that was closing on a major skyscraper in Atlanta. And it was, I don't know, 150, 175 million or something. And Wachovia at the time was backing it, and they couldn't do the financing. And we were like, well, what's wrong? They said, we don't have the money. I was like, we didn't understand what that really meant. What do you mean you don't have the money? You're Wachovia. Of course you have the money. They're like, no, we can't get the money. It's like, how can Wachovia not get the money? You know, we weren't talking 12 billion. We were talking 127 million. You know, at that point, I didn't know what was about to happen, but it was interesting. There were so many signs pointing to what was about to come if you were just paying attention.
Correct. But even I think very few people really believed that these money center banks were just not available. And I think, you know, what's interesting and what I've come to learn is when I say very few people believe these banks wouldn't be available, Small business owners have never felt supported by banks. Now, it's not to say that banks don't do an amazing job at what they do well. They do it really well. In fact, I think they do it the best. But it's kind of like, I hate to say it this way, but the banks are almost like the police. They're never there when you need them. And so the small businesses have always felt like they're underserved by the banks. The banks are there to serve them, but they're underbanked. And when we went through the crisis, I think it became more evident to me, being part of a larger institution. We were always serviced by banks until we weren't. And then it opened my eyes, and it was a humbling experience to realize that, well, wait a second. Not only aren't they there for me, they're not going to be there for me in the way that I thought they were. And then I started actually just canvassing businesses that I went to as a client, small businesses, restaurants, my dry cleaner. I started asking them, hey, when you're in need of capital, whether it's to buy equipment or to expand or just to make payroll at times, where are you getting the money? And the answer was never the bank.
Yeah.
And to me, that was it was an eye opener. But I think, honestly, I look back at that. I think it was for me. I'm not saying that the financial crisis was a good thing. I don't mean to imply that at all. But for me, it was a good thing. Not only was Reliant Funding born from that, but I think I learned a tremendous amount, not only about myself, but about how the financial system worked. And I thought I knew that before. And I think I was very naive.
Yeah. I'm sure you have a much different view on what could happen in the future on our financial services and the industry. I mean, I think prior to 2007, 2008, we thought it would get bad, but I don't think most people knew how bad it could get. What could happen in the future? You've seen a lot of alt currencies, cryptocurrencies. What's coming? What could come down the road?
Listen, I will never try to predict the future, but
some ideas. What could happen?
I worry a little bit about the economy. I think we're in a rising rate environment. Real estate has always been the thing that bolsters consumers. So you have real estate is right back to where it was pre-crisis in terms of pricing, and we're in a rising rate environment. And prices need to soften. The two things have an inverse relationship, right? Similar to bonds, real estate prices and rates typically don't go up at the same time, or if they do, it doesn't last for very long. And then we've got inflationary pressure, and then all kinds of things. I mean, we still don't know what comes out of the tax law changes that recently have occurred. And there seems to be, in my mind, a lot of unrest and a lot of unknown as to where we're headed. But it feels as if the majority of the economy is just chugging along as if none of these things are occurring. So I think what might happen is we may see things slow down a little bit while people try to figure out the relationship between real estate prices and rates. And I'm not in the real estate business, but I watch the markets relatively closely. I think that there's been repatriation of funds for larger companies, and so you may have earnings on a delayed. There'll be a lagging indicator. Certainly, they always are, not leading indicators. But I think consumer spending, we're seeing anyway, not in our space, but in general, we as a society, defaults are back up again on auto loans. Credit card delinquencies are up again. And so we're seeing some of these early indicators start to tick up. And what that means, I'm not really sure, but it certainly, I think, causes a little bit of trepidation and reason to look around and say, where are we today and where are we headed? And what can we do both to maximize opportunity and minimize our risk? And I say that as society, as business owners and as consumers, where is the opportunity right now? And where is the risk? Yeah. And that balance, I think it's a great time to kind of take stock and make sure you're balancing opportunity and risk.
Yeah. Debt levels are at their highest People forget about interest rates on mortgages back in the early 80s when it was 15, 16%. Where are interest rates going up? Are they going up or are they going down? That's easy. And of course, most Americans are just buying the house that they can afford. And if something goes a little awry, they can still afford it, right? No. We all know the answer to that. When you started the company, how did you find the funding? I mean, you were in a disastrous cycle. How did you find it?
It was hard. And what I can, and I'll answer the question directly, but what I'll say is, again, this business was born out of necessity. So banks certainly weren't there for me. And I was trying to learn a new demographic, American small business. I understood student borrowers and their parents. And I'd been involved on Wall Street and in manufacturing prior to that. So I understood how finance worked. But honestly, I did not understand either the psyche, the mentality, or the need of the small business owner. Even having been a small business owner myself, I didn't understand what made them tick, what their need was. And so my original focus first was just on that, learning that. And so as a result, rather than originating assets and holding them on my balance sheet, the way I started was I figured anyone can write a check, right? They may not have the money to write many checks, but anyone can write a check. But finding the hot button for small business, what was their need and how did they want to be serviced was the original focus. So what I did in terms of finding money to just bootstrap and start the business, I went to friends that were aware of my work ethic, my integrity, my moral compass, and my track record of success. And I said to them, listen, I believe there is a need for underbanked small business. They're going to need capital and invest in me, the jockey, not the horse. But I'm telling you, I don't know anything about the demographic. So I'm going to work my tail off to study the demographic and service them. And if I do that well, we'll do well. But the need is definitely there. It's really a question of, can I learn as much as I possibly can about my demographics need? So that's how we started, is I raised money from friends. And originally it was, the first investment was a couple $100,000. Ultimately, I ended up raising just a little over $1 million from friends and some friends of friends to get the business off the ground. And just to come full circle, I'll tell you. So in the beginning, we brokered these files to alternative funders that had access to capital or that were already doing things like this, higher yield type of paper. But all that while I was studying. So I was just a student. A perpetual student, studying, and trying to figure out how to create value first for the small business owner, and then second for my investors. Because I figured if I didn't do it in that order, the business wouldn't be there. If I just thought about my fiduciary responsibility to the investor, my end user, my client, wouldn't really see the value in what I was offering. So the focus was on them and brokering the paper until I felt like I understood not only my audience, the small business owner, but the asset itself. If I was creating a new financial instrument, which was a non-traditional way to fund small business, I wanted to understand both the client and the demographic need, but also how the asset itself performed. And at that point, I could transition the model to hold these assets on balance sheet. So I raised money from friends, to answer your question. I sold off the assets, but studied closely not only the performance of the asset and my demographic, but the box in which others were buying this paper within, and then saw what I liked and didn't like, and then ultimately started to transition that to hold our own paper. And on the investment of a little over $1 million, we've now funded over 1.1 billion.
Wow. And in a difficult environment.
Yes, it is a difficult environment. But this is the thing. I think as your listeners know, certainly as entrepreneurs and small business owners know, almost every environment's difficult.
It was just a time where you had a lot of great businesses that had been very successful pre-2008 were closing their doors. They were just they were gone. And I think
Yeah.
it's a very difficult environment when you're making a risk management bet on, can these people afford to pay this back in what time period? There was a lot of uncertainty. It was not business as usual. So very
far from it.
yeah. And I get this question a lot. Nobody wants to give away equity. Everybody wants to do debt. Of course, all the investors want equity, not the debt. Were you able to do that on an equity basis or a debt basis? How did you end up structuring it?
I did it on, actually, it was a hybrid. I gave equity with a coupon. Now, I think in a different environment, I probably could have structured it more favorably for myself. But I knew it was a brand new business for me. So it wasn't as if the first business, for whatever reason, had to fold and I was starting what I already knew over again. I was really recreating myself and a brand new career, starting a new business in a brand new field. And so I recognized that. And then I also recognized the environment in which I was beginning. And the one thing that carried over from Wall Street, the people that used to work on trading desks always said, bulls make money, bears make money, pigs get slaughtered.
Yeah.
And I didn't want to be greedy. What I wanted to do was learn and try to build something that was sustainable. And if that meant that I had to give equity away and carry a little bit of debt, but I believe not only in myself and the team that I built, but also the concept and the idea, I knew in the long run it would all work out.
What are some of the things that you learned that, and if you can't answer the question, because I know there's probably some regulations, what you can say and can't say with fair lending and all that, but is there something that you've learned along the way that became kind of a common theme amongst those that were good credit risk at the end of the day? Is there anything that has stood out that is kind of a marker for you?
I mean, the simple answer is cash flow. I think cash flow. Everyone says cash is king, and it's such a cliche. But for in terms of managing risk, I think somebody's credit score is much less indicative for a business than the business's cash flow. And by cash flow, too often people just think revenue. But I'm truly thinking about both inflow and outflow of capital and the timing of that. So you look at a small business like, let's just say a pizzeria, simple example, although a more complicated business than you'd think. But you look at a small business like a pizzeria, and then you look at a small business like a construction company. And the cash flow scenarios for both are very different. But both might be incredibly and wildly successful. The pizzeria is doing tons of small ticket, constant sales. Money is coming in small increments, $10 at a time, all day, every day, right? From lunch rush through 10 p.m. And then dollars are going out constantly to buy supplies and make payroll and pay rent. And then construction, they may be making big ticket purchases like trucks or heavy equipment, or supplies for a job, concrete, lumber, etc. And they may not get paid, but maybe a small deposit, and then their milestones before they receive more cash. Net of everything, the inflow and outflow may be the same, but the timing might be wildly different. So, and their FICO scores may be the same, or they may be very different. But ultimately, by looking at cash flow, you can determine how much risk to take and when to take it. And so, without going into too much detail, I give that example just because I don't want to leave it at cash flow and everybody throw their arms up like, of course he said cash flow. But the nuances of how it actually flows and when it flows and whether it's small ticket or big ticket really is an indicator for risk. In other words, the pizzeria that does $25,000 a month and the construction company that does $25,000 a month, construction may see 2 deposits of $12,500 each, and the pizzeria might see 1,000 deposits, right? And so where is there more risk? In this example, I'm not saying construction is always more risk, but in this example, I'd much rather see, maybe 1,000 is a bad example, but 100 to 500 deposits throughout the month, equating to that 25,000, than 2, because in the future or subsequent months, if one of those deposits were to go away, there's a lot more risk. But on the surface, if you're just looking at deposits, they both show 25,000, right? So truly the way the cash flow moves is an indicator for us. And hopefully that's not too long-winded of an answer.
No. First of all, you touched on something that we talk about all the time here, and that is operating cash flow, specifically, as opposed to just cash flow. That can include financing cash flow in there. And most entrepreneurs, their eyes glaze over and go, what's first of all, what's the difference? I don't get an operating cash flow statement from my CPA or bookkeeper. And I keep my books on a cash basis. It's like, you have no idea how you're doing whatsoever. Right. I mean, you're flying a plane without instrument, and it still astounds me. The level of unsophistication when it comes to understanding finances for people that are running a ship, running a business that's their lifeblood, and they're just kind of rolling the dice. It's like, hey, we got money. Yeah, there's a checking account and there's some money in there.
Well, I think all too often, small business owners, they started small, or they started with an idea, and hopefully that business begins to work, and it's a lot of work. I mean, I know, and all the clients that I service at Reliant, they know that you're pulled in a million different ways, and you're looking at so many things, and you're thinking about how to be strategic and how to execute on that, hiring the right people, making sure that you're staying ahead of the curve, not tripping and falling into too big of a gully. And all the while, when you started this, you weren't an expert in finance. You didn't have an accounting degree. And so I think that, I understand exactly where you're coming from. And I've worked hard to make sure that I understand, the ins and outs of finance going back to when I graduated school and got into business. But I absolutely understand where these small business owners and entrepreneurs are coming from. Their angle is, I had an idea and I'm just trying to execute on that idea. And if I stop and I focus on my finances, I'm taking my eye off of this. I'm already wearing hats A through X. I can't add, Y and Z now too. And that's why, like I've said to some friends that are entrepreneurs and small business owners that aren't very strong in finance, just hire a good bookkeeper, and make sure that bookkeeper not only tracks these things for you, but then don't be an absentee owner when all right, the bookkeeper will handle it. No, let the bookkeeper, through time, slowly, just by sharing your financials with you, you'll learn. Just don't turn a blind eye to it. So hire the bookkeeper and then ask for updates, periodic updates, whether that's weekly, bi-weekly, or otherwise. It's so important. So when I started Reliant, the first 4 years, it was a financial struggle. I mean, I was nervous. I was freaked out. I mean, I knew what my payables were, and I knew what my receivables were. And I knew sometimes that I owed more than I had, or I had more coming in. And I hired a bookkeeper, and it was a $40 an hour bookkeeper that just worked a few hours a week. But everything that she did, I studied. So if that night I didn't know what was going on, I would then read, and then the next day I'd ask questions. And although $40 an hour, it may sound like a lot or a little, depending on where an entrepreneur may be in their business, but I was happy to invest an extra $40 to $200 to understand my financials, because it helped me determine what I was able to do next. Yeah. And that I think is and look, I had the background of having worked on Wall Street and having been in a portfolio business where we had $1 billion, coming through every few months in asset origination. So I had a better background, or maybe a head start over the average entrepreneur. But in terms of managing the business and managing our financials, it was a balancing act. Yep. And so I might have spoken the language more than the average entrepreneur, but I did not have the time to do it. But the worst thing a small business owner can do is ignore it, or just look, as you say, at their bank account and say, well, I owe $5,000 and I have $6,200, so I'm in good shape. That doesn't work.
No. And it's, It's something that I talk about all the time. And so often we see that they focus on, okay, so let me get out of this financial crunch just by accelerating my sales. Now, if you're in manufacturing or you have a physical product, the acceleration of the sales and the delivery of those products can actually put you in a worse position, as you know. As you're growing, trying to get out of it, it'll actually sometimes multiply your cash flow issue.
Correct. And actually, we had that issue early on here. The first year we funded $1 million. The second year we funded $3 million. That kind of growth, although percentage-wise was enormous, it was okay. But the following year we went to 6 million, and I had to go back to my friends and ask for money. And they said, well, hey man, you went from $1 million to $6 million. Why do you need more money? And I explained that the marketing, the salespeople, we're growing. The following year we went to $18 million. And then the year after that, $50 million. So over just the first 5 years or so, going from $1 million to $50 million almost sunk me. Yeah. And on the surface, it looks like that should have been amazing, but behind the scenes, 50 million, that growth was more of a struggle than 1 million to 3 million. Yeah. You're 100% correct. And this is we're in the business where we don't have any hard goods. I'm not buying inventory, and it still was crushing me because the cost to originate and service, it's exponential. I mean, when you grow like that, you have to be able to carry it. And even today, now with assets on our balance sheet, where we're originating a couple $100 million a year on balance sheet, there's debt in their equity ratios, just like in any other facility-based business. And as we grow, not only are you fueling your expenses, your SG&A and your marketing and your overhead, but you have to keep your ratios intact, and everything is attached. So if you move one lever, that lever is not independent of the 100 levers that are next to it. Every dial you turn, every lever you move affects these others. And if you don't have a great command of your financials, there's really no way to predict how moving one thing will affect these others.
Absolutely. So tell me some of the lessons that you learned along the way. What's a lesson that you look back and go, "Ooh, I wish I had done that one differently"?
Well, the first is I think in the beginning, and maybe this is hopefully not too personal, but I had a tremendous amount of self-doubt in the beginning, and but I didn't really address that. Instead, I just tried to power through it or pretend it didn't exist. Once I converted that into more confronting the self-doubt or what might be causing that, and I'll call it anxiety, but I think self-doubt's normal, and all too often, at least for me, and as an entrepreneur with investors, with employees, I acted as if, instead of acknowledging the areas of doubt or weakness. And if I could go back, I'd immediately address those items. And now I'm very open with employees. We're private equity sponsored now. Even with the sponsors, I'm very open about the areas that concern me. That includes areas that I perceive as either weakness or areas of doubt or concern about myself and ability to execute. In doing that, it's an incredible learning experience. And then I discover much more quickly either A, where I'm weak, and then I can work hard to overcome the weakness, or better yet, fill gaps in my strength by hiring people that are amazing in the areas where I'm deficient. And in the beginning, I tried to do everything and quickly realized that I'm not great at everything. And so to answer your question, I think that I would love to have gone through this process earlier in my career. But I'm happy that I found it, right? Or that I confronted it and adjusted accordingly.
Yeah. It's so often I mentor young entrepreneurs, and it's, I can't wait till I get to your stage where I have no self-doubt. Everything works perfectly. I'm like, it doesn't work that way. What you see in the marketplace and you see in successful entrepreneurs, they had all the self-doubt. They still may have the self-doubt. All they're doing, and you hit it perfectly, is they act as if. They act as if it doesn't exist. And even though they're scared shitless, they're still moving forward.
Right.
And when we never figure it out, there's always something new that's going to pop up. There's always a new experience to learn from. And we don't have all the answers. We'll never have all the answers. We just keep moving forward.
Right. Well, and so I couldn't agree more. But now what I do is I use those feelings of doubt or anxiety as fuel to push me forward, where before they would slow me down a little bit. I always acted as if, but I didn't actually confront even internally whatever it was I was feeling.
Yeah. You still you wanted to hide it. Now it's like, look, I don't know what I'm doing here, but I'm just moving it and come follow me, guys. Yeah.
Right. And we're going to figure it out. And right. And so, for example, I'm not very strong in IT. And although I'm great at math, I don't necessarily speak accounting. And so having an amazing CFO, having someone that's strong in technology, it's great for me to be able to turn and say, I don't understand this. Can you explain it to me? And I encourage even someone that's the expert in the role, if you don't know, just tell me you don't know and we'll figure it out together. Just don't pretend. The doubt is okay. Let's keep moving forward and let's figure it out together. And it's just a very different approach than when I started.
Yeah. One of the major lessons I learned along the way was vulnerability. I literally had trouble actually saying the word vulnerability. Literally, I just couldn't pronounce it. It was almost laughable. And then someone close to me once said, as if you're sitting there and you're all protected and you're kind of protecting yourself, that's not it's a very rigid form. But when you open up and you expose, your vulnerability, there's a freedom that occurs there and a lightness, and movement is so much easier because you're not worried about what people think or what they might find out. You're just you're in a flow state. And it was a real change. It was a real life-changing event as soon as I got to the point where, you know what? Some people are going to like me. Some people are not going to like me. Some may attack my vulnerability, but as soon as it's exposed, there's really nothing to protect. There's nothing to hold. And it changed not only my personal life, but also my business life. And it's something that it was a gift that I continue to cherish, that, you know what? Just put it out there. Just lay it on the table. Even in business, when sitting down with someone, we tend to sometimes hold our cards close to our chest, and we don't want to let the other person know what's important to us. Put them on the table. This is what's important to me. What's important to you? Let's figure out if there's a way to do business here. It's a much easier.
I agree with that, and I'll take it one step further. Although I do exactly what you just outlined, but the other thing, I had this realization that there are two reasons there are two reasons that will interfere with me finding success or being successful, and it's either because I can't do something or I won't do what it takes. And so I had this realization that if I can't do it, there's nothing I can do about that. I mean, I can learn how to do something maybe that I never learned how to do. But, I'll give the sports example of I can't dunk a basketball. So I know I won't be successful at dunking a basketball. But in all these other areas, if I can't do it, okay, I can accept not succeeding because I can't do it, right? But the won't, I have to overcome. So and even some of the can't you can overcome with training, but I have to accept whatever limitations there are. And again, that's why it may be that I can't do something, but you can. And if you can do it and I can't do it, then I just need you on my team. Then we can do it. Yeah. And so I try to, everything that ends up becoming a hurdle for me has to fall, in my mind anyway, into one of those two buckets. It's a hurdle because I won't do what it takes, and then I force myself to do it. Again, of course, within integrity and morals and legal nature, right? But if I won't do it, I recognize that and I alter my attitude. And if I can't do it, I determine, can I either learn how to do it or can I find the person that can? And then I bring them onto the team, and then we overcome whatever the hurdle is. And so just by breaking it down that way, it allows me to confront the self-doubt, and it also allows me to confront a lot of the hurdles that I'm dealing with, categorize them, break it down in a way where it becomes palatable to overcome the hurdle. And so far so good. I mean, but again, I wish that I came up with this system for myself many years prior.
Yeah. It's funny when you say can't. There's a dictionary back on that shelf somewhere. I have 2 of them. And the page that can't shows up on is ripped out.
Right. Good for you.
Literally gone. And it's interesting because when we say can't also, I can't do that, your mind automatically, just like a computer, shuts off and stops looking for answers and how to do it. And how often we use that word. It's like, hey, would you like to have dinner Friday? No, I can't do that. Well, is it you can't or you won't?
Correct.
And it's funny because I've switched my language pattern to using the word won't. And it's very shocking to people. I'd like to get together. I won't do that. I could do it, but I used to do this with my kids when they were younger. They're like, Dad, can we go get ice cream? Well, we could, but we won't.
Right.
We're not going to do that. So I like that, because when you say you won't, you're making a decision, a conscious decision that you could, but you're deciding not to. And is it something you really should be doing?
Correct. And it brings that to light. And then oftentimes we'll force you to refocus.
Yes.
Because you don't want to admit to yourself, in the examples you gave, I say I won't get ice cream to my kids all the time as well. But I don't want to say to myself that I won't do what it takes to be successful at this. Yeah. So by forcing myself to look at it that way, I end up changing my attitude about things that are hard. And all of a sudden I'm enthused. That's why I said I use this as fuel. It just becomes kind of like a matrix, if X, then here's what I do. And if Y, then here's what I do. But in either case, I'm still finding a way to overcome.
Yeah. 2 things I use there is one, code of conduct is I always try to remember tomorrow and what it's going to feel like tomorrow. There's no regret in the moment, but tomorrow, as I look back on this moment, if I didn't do what I was capable of doing, I know I'm going to feel regret. So I try to future pace myself and look at what tomorrow is going to look at. And that's a real, it helps make a decision in the moment. And another core belief that I live by is I don't quit when I'm tired. I quit when I'm done. When the project is done, when the thing is done, when it's finished, that's when I stop.
Right. It's a lot more fulfilling that way.
It is. And here's the thing. It just takes a little bit more inertia, just a little bit. And then as soon as you get over that, then it's easy. It's not this huge uphill battle. It's just once that decision's made, then it becomes easy again. The whole time that you're fighting, it's like, oh, I don't really want to be doing this. I've got better things to do, whatever it is, or I'm not good at this. You're struggling. And as soon as you go, I'm doing it, it goes, wow, it just became easy.
Right. Yeah, it's mindset, like almost everything else.
Yeah.
It's just conditioning yourself. I tell people that work here, if you have to trick yourself, that's okay. It's not malicious, right? Trick yourself. So about 5 years ago, I started going to the gym often, and in the beginning, I didn't like it. And so I made it competitive for myself. I'd walk in and I'd assess, who was on the treadmills. And then I built this competition in my own mind. No one else knew about it. All these people were just innocent bystanders, but I was out to get them. So I would get on the treadmill with this attitude of, instead of, I don't want to be here, I got onto the treadmill with the attitude of, I can't let them beat me.
Yeah.
And next thing you know, 5 years later, I'm going every day with a smile on my face.
Yeah.
So it's a mindset. I tricked myself into thinking there was a competition that didn't actually exist.
Adam, we could go on and on for hours here. Thank you very much for coming on. Would you please tell the audience, because I know there's going to be many people in the audience listening and viewing today that are going to want information on your company and what you can do to help them in their business.
Sure. Please go to reliantfunding.com, RELIANT, funding.com. And I would also encourage people, if they're interested, to reach out to me on LinkedIn, Adam Stettner. And you can look both Adam Stettner and Reliant Funding. I'd love to connect with your listeners and your audience.
Terrific. Thank you very much.
Thank you for your time.
You built an amazing company, and well done. And we look forward to seeing you. Are you going to be on the Inc. 5000 for the 6th year?
I hope so.
All right.
I hope so. Yeah, we'll find out in August.
Terrific. Congratulations.
Thank you very much for your time, Thor.